Well, good morning. Yes, it is true that Tesla hit the street's numbers this morning, but there's no ignoring it. That was not what the street was really expecting. What they were really expecting was the whisper number. And what's really crazy is that the street is punishing Tesla a lot more than one would expect. However, for those who have dry powder, I have to believe they are licking their chops this morning because, well, okay, let's take a look just real quick. It was 14 last time I checked. Let's see, just for fun, we'll start out with that number right now, $14 down. So 6.5% because of hitting the number that the street actually was estimating. Anyway, it's I think the stock will be substantially above that number by the end of the day, or certainly by the end of tomorrow, as we get another one of these knee-jerk reactions. But I suspect I'm still calling my 265 by 10:10. Believe it or not, doesn't take much to get back there. All right. But one of the things about the number this morning is that it creates tremendous challenges for Elon to get to his projected number for the end of the year. He says it would be a beat for the total of 2024 over 2023. That is now looking decidedly problematic, not impossible, but problematic. So we'll see what happens over the next 3 months, the next 90 days. Well, production came in at 470,000 and shipments came in just under 463,000. The street was at 462, 463, somewhere around there, depending on which street analysis you really looked at. It was certainly below the whisper number, which is 465 to 470. But the real shock to me was how badly AJ, Larry, and Troy missed. I mean, those were pretty big misses for those three. So the whisper number probably had been exacerbated by the fact that so many of these top analysts got it so wrong. There might have been a reason for this, although with production only at 470, you're not going to be hitting 480 or 475 if your production is only 470. So that was interesting. Anyway, Cern Basher also weighed in on a couple of things. He says this morning, look, Q3 inventories, by his calculation, Tesla's global vehicle inventory was just 18 days at the end of the third quarter. That would be the same as at the end of the second quarter. True, and that makes sense because you basically had 470 manufactured and 463 roughly shipped. So that's $7,000, 7,000 unit difference. Not going to make a huge difference in inventory days, especially because you have a slight increase over the second quarter in terms of totals. So he says if you take out the transport days, there's true inventory days. You got all these transport days. So if you take those out, you're really looking at 0 days of inventory. So meaning that you can't just walk into a Tesla showroom anywhere in the country and walk away with the product, or you can't just go online and order and expect to be able to get it in a day or two. So why is Tesla keeping inventory so low? He asks that question. Perhaps it's preparing to launch some new models. That would be a good reason. So you'd want to keep your Model Y inventories, in particular, you'd want your Model Y inventories to be very low because, in the next 90 to 120 days, we are expecting the Juniper. I sure hope it comes sooner. I've been saying this all year. The sooner the better on the Juniper. Anyway, in that case, you don't want excess inventory of the old models if the newer ones will be more appealing. Again, talking more about the Model Y here, really. Model 3, you're not getting a new product there, so your inventories there, you want to keep them higher. Trailing 12-month storage deployments. Let's say now we're talking about energy. Trailing 12-month storage deployments are now almost 50% of the stated capacity of the Lathrop manufacturing facility. And combine that with power walls. This points to a significant lag in energy storage deployments. So we think it's producing at 100%, and yet the last 12 months we're only showing 50% in terms of what's hitting the profit line. So that should be interesting in the upcoming earnings. We may see even larger amounts of off-book profit that will be coming up later. So that the energy numbers came in at about 6.9, I think it was, and that number was also, I mean, it's a miss compared to last quarter, but this has all been warned that it's a lumpy number that's going to be up and down by the quarter. If you go on from there, Sawyer Merritt says this morning, a note from Adam Jonas this morning. Most expect that attendees of the 1010 event will be shown and given rides in a cyber cab on a closed course. Potential initial commercial introduction could be late 2025 or 2026. Really late 2025. It is our expectation that Tesla will offer a dual approach with respect to autonomous ride sharing. Number one, the fully autonomous app-based cyber cab, and two, a supervised autonomous FSD rideshare service. We think the latter of these may get the most attention or have the greatest room to surprise investors, at least near term. In fact, we think the vast majority of rides and miles traveled in our Tesla mobility model through 2030 and into the 2030s will fall into the FSD supervised rideshare category, where the vehicles are owned by individual drivers or third-party fleets. Well, I think that is the dumbest note I've seen in a while. I do believe that Tesla will offer supervised rides, and I hope it's really soon after the 1010 event. Like 1011 would be okay with me, but the sooner the better that they'll offer supervised drives on their app through their system. So starts testing out the system. But I believe that unsupervised rides or autonomous rides, or however you want to look at it, no driver needed, are in the next 12 months. Certain, maybe even a lot sooner than some people think. This is Randy Kirk. Hit like, hit subscribe, hit notify. Later this morning, it might be. I'm not sure whether Scott Walter will be coming on this morning or not. He is in Florida. I know he may. I don't know what. I haven't heard yet what Scott went through in terms of that, his home there. Hopefully everything was great. And then, but I haven't heard back from him yet this morning to know if he's going to come on this morning. And then, of course, on Wednesday night, we've got Jeff Lutz. So you can look forward to that. And your participation in the Patreon business would be helpful. Look down below and you'll find the link. Okay. Markets this morning seem to be nervous, seem to be mostly thinking about, seeming to be moving primarily about the Middle East situation. Maybe that's because there's nothing else on the table. I'm not sure. I'm supposing they're now wondering how Israel will respond to Iran's rather successful missile barrage. According to normally reliable sources, the missiles that did penetrate the Iron Dome destroyed some specific military targets, including 20 jets, but they were not headed towards, and they didn't land in any civilian neighborhoods or civilian infrastructure situations. So that sounds like they're getting a little better at aiming. And that's not a good thing. I mean, yes and no, but it also tells us something about their strategic, the strategic implications from Iran. I think Iran was saying, "Hey, Israel, this is our new capability. Don't strike back," or we need to not continue this back and forth. I think they're looking for Israel to stand down with regard to Iran. We'll see how that message wears. We'll see whether Israel has something planned. Their strategy recently has been impeccable, but maybe they were. Or it's interesting whether Israel was expecting Iran's capability to be quite this good. But if you look at how the markets are, the oil market, the bond market, et cetera, this morning, you would think it seems to imply that everybody's attention right now is on the Middle East situation. Well, then we also had ADP's numbers come in. Private sector employment increased by 143,000 jobs in September. That was well up from last month's number. Annual pay was up 4.7% year over year. That is way too high. Stronger hiring did not require stronger pay growth. That was pretty strong pay growth. Typically, workers who change jobs see faster pay growth, but their premium shrank to 1.9%, matching a low that they last saw in January. Year-over-year pay gains for job stayers, we just said that, was at 4.7. For job changers, they declined from 7.3 to 6.6%. We had Prince Abdulaziz bin Salman, Saudi Arabia's oil minister, warned that oil could drop to $50 if his members don't get in line. The members of OPEC don't get in line. Planned production increases in the U.S., Guyana, and Brazil are expected to add over 1 million barrels a day to global oil supply. And Brazil joined OPEC, but they said they're not going to participate in the output cuts. So they're saying, hey, we want to be part of OPEC, but we're not going to go along with your planning. So those are the things that seem to be impacting this morning, although oil, last time I checked, was way up, even with this coming from Saudi Arabia. All right, so just a quick little political thing this morning. As I said, I'll talk about politics on this channel, especially if I think it's going to impact, the stock market or Tesla. But this morning's is just kind of the impact on the race. I'm sure many of you, probably all of you, watched the Vance-Walz debate last night. Love to hear your comments below. Here were the 5 takeaways I had from the debate. Number 1, there was a clear winner. It was Vance by a landslide, and I don't think anybody would debate that. I watched CNN and MSNBC responses to the debate, and some of them were wishy-washy on the fact that Walz won, but that's what you'd kind of expect. Number 2, Walz didn't look ready to take over as president. I don't think anybody that watched that would think that he looked like he was ready to be president. Number 3, the combination of Harris and Walz now is by far the worst ticket on either side of the aisle that I've seen in my 60 years of being very attentive to political stuff. I started paying very great attention at age 16, even before 16. With the Goldwater race was the first one that I actually went door to door to get the vote out. So I've never seen a worse ticket, I don't think. The Republicans, number 4, the Republicans have a very, very deep bench right now with Vivek and Tulsi and lots more very young, very outstanding candidates. The bench on the Democrat side is, non-existent. If this is the best 2 that they can bring, then they have no bench at all. And I've been saying that for, I would say, over 3 years that they've had no bench, zip, zero, none. Number 5, the betting did move. The only thing that you can see that really moved after last night's debate would be the betting. It is now a dead heat. That moved at 2% overnight. Harris was ahead by 2 in the betting. This is the overall combination of all the different betting sites. Was up 2% for Harris as of yesterday, is now dead heat. And then just 2 weeks ago, Harris was ahead by 6%. So lost that entire 6% in terms of the betting odds. You've got Real Clear Politics showing no difference yet, of course, but right now showing that if they don't have any, if they look at the vote on the popular vote, they still have Harris up, but on the Electoral College, they have Trump winning easily at this point. You've got Behizi tweets, says this morning, even Chris Cuomo is blasting the CBS moderators for trying to fact check J.D. Vance. He says, and look, Vance was right. There's nuance to it. And you got to let them have their speak, because now CBS, you created a story where you're the problem. And that's not how these debates are supposed to go, says Randy. Everyone sees through the bull. That was not me. That was Cuomo. So Yeah, I mean, that's really, it just continues to be that way. I think Trump said this morning he's backing out of a 60 Minutes. That's CBS. He's backing out of a 60 Minutes deal that he had made because he just can't trust CBS, to be fair. And that's a sad commentary. All right, let's go ahead and look at where the markets are now. We still have Tesla sitting down $14.60. Man, I don't have any dry powder right now. I would be buying. That is not investment advice. That's what Randy would be doing, especially if I was back to day trading. I would definitely be in at this number. We're sitting at 243. That means we've got 22 points to get me back to 265. The Dow Jones is down just 18 this morning. NASDAQ down 8. S&P down $4.81. I mean, $4, 4.81. Boy, pretty flat this morning in the overall market. The Mag 7, except for NVIDIA, all down, interestingly, even though the NASDAQ is only barely down. I mean, Meta's down 3. Amazon just pennies. Google down 1.43. Apple down 99 cents. Of course, Tesla dragging it down the most. And NVIDIA up $1.17. So very much down there. You've got the Cathie Woods also all down. Now, part of that, the Cathie Woods would be partly due, of course, as we always talk about, the bonds, which are up this morning. The bond market is now responding maybe to the ADP numbers being so strong and the amount that people are still getting paid in terms of an increase this year over last year is way too hot. And the percentages, these are easy. I mean, call it anyway. Down 0.04 for the Dow, down 0.04 for NASDAQ, down 0.07 for the S&P. Like I said, really basically flat. All right, let's go ahead and look at those bonds because that is certainly one of the stories this morning. We've got the 10-year up 5.5% to 3.798. Now we're back to that 3.8 level again, which is where it met a lot of resistance. It couldn't get past 3.8. It was 3.81, whatever. But basically up 5.5 this morning. You got the 2-year only up 1 basis point. So, the 2 years up 1 basis point. So that continues to spread the way it should be spreading. And you've got the 3-month finally doing the right thing. It's unchanged this morning, 2-month down 2.1. Now, remember, a lot of people have said that the 10-year needs to move up to meet these short-termers, which is what it's doing today. But it's really shocking me to see the 10-year. It's only 5 basis points, but I really think the 3.75 number is where it should be right now. All right. So it's not, we're not talking about a huge move, but it's interesting to see. Okay. Moving on to, I was just looking at a headline. Sorry for that interruption in my brain thinking here. Okay. We've got oil up another $2 at 71.93 and 75.54. And that is over $4 now. I'm sorry, over $3 in difference on that. We've got, I missed natural gas up 2% at 2.956. Maybe going to go over 3. That would be interesting. Gold down 10.30. Now that doesn't seem like it's concerned about the Middle East. 2006.80. Silver, though, up 2.23 at 32.435. Copper up 0.81% at 4.626. Dollar down against the euro and up against the yen. 1.54%. Down against the euro only 20.22. I'm sorry, 0.22. Let me say that clearly. The Bitcoin down, but not knocking at the door of the 50 handle at this point. 61,225, but down 636. And that would be all of the different things on the table this morning. Let's go back and quickly look. Still 1480 down on Tesla. No real change there. All right. So just a quick reminder, later on this morning, maybe it's got Walter, maybe it just got me. Sometime in the next day or two, I'm supposed to have AJ on to give us a review of the earnings numbers. After these numbers came in, he's going to redo his expectations for the third quarter earnings, and then he's going to come on the show and talk about those. So that'll be really fun. And then I'm not sure which day that's going to be. And then, of course, Jeff Lutz on tonight. I'm sure he'll have some things to say about what happened on the market today for Tesla. Still down 14. Again, I think by the end of the day we'll be down 5. There you go. There's my number. What do you think? Let me know in the comments below. What did you think about the Waltz and JD Vance debate last night? Love to hear your comments on that. All right, that's it. Been great talking to you.